Yeah, that's great. So first of all, Jonathan, thank you very much for getting on today. I'm going to set the scene a little bit for you, and then we'll move into the Q&A for me and others. So we've oriented the computer so that he can see at least part of the room here. And you always wonder how these things are going to go. So far, it's really other experiences like that. So I'm Charlie Spies, as I mentioned earlier, from CEI. Very familiar with the work that Jonathan has been doing for several years before Opportunity Zones came along, and now with a multi-asset fund that he's working on with a very heavy focus on Maine. Jonathan, to give you a sense of who's in the room, you can tell, you can see part of them, but about 25 people. They are community leaders, municipal leaders, economic development specialists, and also folks from the University, Finance Authority of Maine, people from the Forest Opportunity Roadmap that have been working with rural communities. So it's a mix, but a group that's very interested in how Opportunity Zones might be applied to their rural communities, or rural communities in Maine in general. We've had 2 sessions thus far, as you know from the agenda. The first was kind of a new markets, Opportunity Zones 101 with a representative from the Department of Economic and Community Development and an accounting firm. They talked through some of the elements. And then Colin just gave a really nice kind of visual presentation on how communities can think about a prospectus, not necessarily an investment, pure kind of typical investment prospectus, but how they can package themselves or their region to show investors like you what the bolt-on opportunities might be if you were to invest in. One of the things that was highlighted by Jay Harden from the town of Lincoln here was that this is an investor to business program. And what I infer from that, and from some of the work I've done around it, is in the conversation today, it's really very entrepreneurial. The towns, the communities, the regions have to be thinking about how do they move to make this thing work for them, and when will it work for them. And on the other side, the investors are thinking about that as well. There are certain types of projects that will work for them, but also how can they work with communities in an entrepreneurial way to make this program work. And by that I mean, as we heard earlier, Congress has passed this. Whether there will be changes that change the program to make it more accommodating for rural communities or communities in general is an open question. So we have what we have. We have to think about how best to use it, and that's probably going to be a little different in different areas. So I also wanted to know, Jonathan, that we have, I think I mentioned Fane here, but Carlos Melos, who we work with quite a bit in terms of risk mitigation for the program. And then Jonathan, I want you to introduce yourself, but as I mentioned earlier, I'm familiar with his work and was familiar with his work before Opportunity Zones came along. I do know that Jonathan is one of those kind of entrepreneurial investors, if you will, to use that term in this session, looking at social impact, looking at how to structure investments with other risk mitigators like with Fame or others, looking at projects that may not necessarily be pure private business projects. They might be rural broadband or something along those lines. And he's going to talk to us about that. The line of questioning that I've been asked to use on my script a little bit is first, what are the what's the investor methodology? How would someone like Jonathan's team look at betting opportunities almost anywhere? And then how will they look at our rural communities, economies, any different, or how might they approach that differently? So we'll start down that line. But Jonathan, first I'd like to hand it to you to kind of introduce yourself to the group here and let them know your background.
Sure. Well, thank you, Charlie and Rob. It's great to be here. And I picked up the tail end of Colin's talk there too. I think he's spot on in terms of the power of internal marketing and prospectuses and whatnot. So I always enjoy hearing what Colin has to say. I'll give a quick background on Arctaris and who we are. Sure. So I co-founded the firm 10 years ago. Prior to Opportunity Zones, we had launched and managed 4 funds focused on companies and infrastructure projects located in low-income communities throughout the United States. We did 2 nationwide funds, and then we did a pure Michigan fund in partnership with State of Michigan and U.S. Treasury Department, and then Fund 4 was again a nationwide fund focused on inner cities and rural areas throughout the United States. And in each of these cases, there's a government partner and or a foundation partner that becomes part of the capital structure. We call this last money out capital or guarantee capital. Finance Authority of Maine partnered with us on the pre-OZ fund under its commercial loan guarantee program, and we've done similar things with other cities, counties, states, and foundations, either targeting a particular underserved region or an underrepresented entrepreneurial group. So that's what we do, and we've launched an Opportunity Zone fund in partnership with some of the largest foundations in the country, plus Finance Authority of Maine and other cities, counties, and states. So we're excited to have partnered with FAME on this. We've committed $50 million from that fund to Maine in conjunction with up to $10 million of guarantee commitments from FAME. And we're seeing quite a few opportunities that we like and that we want to pursue in Maine right now. So excited to be here. And then I guess on to Charlie's question. I mean, how does someone get an opportunity to us? Opportunity might be a business that's looking for growth capital. It might be a public works infrastructure project like a waterworks or something with the utility infrastructure. It could be something in the realm of, we're doing a lot of rural broadband fiber deployment work and solar or industrial development. So we have a pretty broad aperture, certainly looking at workforce housing and affordable housing options as well. So we have a pretty broad aperture. And happy to go into greater detail on how we look at certain things and what would be a fit for us and where we might not be the right fit. But the best way to get a deal to us is, it's just simple, info@arctaris.com. The only hard part about it is spelling our name, which is frequently misspelled, but it's ARCTARIS.com. And also, Finance Authority of Maine has historically been a great conduit of really attractive investment opportunities to Arctaris. So, certainly coming through the FAME channel is great too. But info@arctaris.com. It might not result in a 24-hour response time, but we do look at everything that goes through there, and we do follow up. So that would be the best way to find us.
Great. Thank you for that. I'm going to kind of work through some questions, some basic ones on, okay, if you are sending something to info@arctaris.com, what should it look like to help you move down the road? But also would invite members of the group here that if you want to ask an immediate question of Jonathan, I'll try and notice you and get so that we can answer that question in the context of the conversation at the moment. That's okay with you, Jonathan.
Yeah, that'd be great.
So yeah, just some very basic stuff. I mean, you mentioned that FAME's a good conduit. Your website is a good conduit. But when people are sending you information, you heard part of Colin's presentation, but he said investors are either lazy or busy. And I can speak authoritatively and say that you are busy because there were emails being exchanged over the weekend and other comments around that. So something that the potential project, the person or the entities that are proposing a project or trying to endorse it, really need to think about how they use that investor's time and what that investor is looking for in order to, frankly, get them to keep on spending time. So can you talk a little bit about what you're looking for, maybe from the first intro to it, and then what you're going to ask some of these community leaders, how they might be helpful to you in terms of getting you to think about your own resources on hand at Arctaris in terms of human and also financial to proceed down the road to get to a no-go or a go decision.
Yeah, so I mean, most of the companies that we're investing in would have between $1 million a year and $10 million a year in trailing profits. If it's 1 or 2 million, we would probably consider it to be a better candidate for a loan, and if it's at the higher end of the range, it would be almost certainly an equity transaction. But we do use both tools, and we try to use the right tool for the job in each of these cases. Typically, we're going to want to know things like what was your revenue last year? What was your profit last year? How much debt do you have? If the goal is to put $15 million of new money into the company, how is that going to be spent? And you know, what are the outcomes that we expect to see? You know, I mean, it's sort of a cliche, but we do invest in good management teams. So, you know, it's going to be a team that's been experienced in doing something, that whatever they're doing, they've had experience in that in the past. You know, we just were recently introduced to a group in Maine that's doing a consolidation strategy for veterinary practices. So they're buying up veterinary practices, consolidating them into an opportunity zone, and have pretty rapid growth plans. And what they're finding is that the consolidated company is much stronger than each of the pieces. So you know, we're intrigued by this. But that deal for us, it's at first base. We've had some calls. We're still getting information. We like the story, but they had a financial model. They talked about their 5 acquisitions to date, and they talked about the sea of other acquisitions that they might want to pursue in the future. The team had background, and you know, we had a financial snapshot and some justification for why this is a good strategy for Maine. Why should Maine want this company to be successful? What value is it delivering to the communities that it serves? So, you know, that's a neat company. I think we, you know, we've been looking at quite a few rural broadband fiber installation strategies there too. The story there is probably not going to be well, hey, our team wants broadband. How do we get it? It would be, you know, it's going to cost $4 million to lay fiber. You know, here's 1 or 2 ISPs that want to work with an open access network. And you know, here's some reasonable expectation of what the customer take rate would be in these areas. So I mean, we're looking for pretty well baked, pretty well thought out business plans where we can come in as a value add partner and help the entrepreneurs, help the team develop it better, and you know, make it a stronger, more resilient type of company. On public works infrastructure, I mean, that can mean anything from, you know, putting up a solar farm for a municipality to putting up a new academic building for a school district or a university. It could mean waterworks, sewer, anything like that. Those types of infrastructure projects, you know, we're really looking for what's the cost, what's the time to completion, what are the objectives of the university or municipality partner in this situation, and how do we get this done? So I think, you know, clearly, you know, we're data driven, we're numbers driven. We don't need all of the answers to be, you know, available at the time of the first meeting, but having some sense of, okay, well, we need $40 million to do this project, and we think we've got 20 million from federal and 10 million from XYZ Bank, and we're looking for another 10 million to solve the last mile gap. I mean, those are the types of things that you know, would generally be helpful in a first discussion.
Great. As you're describing your process, it occurs to me that, you know, these community leaders they're not the businesses. but they may have businesses that are thinking of locating, or maybe they have a public works project. I shouldn't say that really because of what your willingness to think broadly about this. But can you comment a little bit on what was raised earlier about this is a business to investor program that could use some other stacking with other programs. But in terms of these community leaders, if they came to you and said, hey, we have a brownfield site at a mill in our town, what do you think? Is that insufficient? Which I think I know the answer to, but I'm just, what do they need to do? Do they need to meet with a business first to really package that to talk to you? Or can they say, we have a site that might be very good for, something that needs a lot of water purification? Do you know of anybody who might invest here? How does it go both ways, or is it a one directional effort?
Yeah, I think that would be, maybe we're looking for a brownfield site right in that neighborhood, and lo and behold, it, lands on our desk somehow. But I think generally we would be looking for something more. We do like doing solar projects, so it could be, hey, we've got 20 acres of brownfield here. We can connect to the grid. We're doing Maine Community Solar. There's a large industrial company that wants to sign a 25-year offtake agreement, something like that. I think that would be, all the pieces don't need to be in place in hand, but something more along the lines of that. It would be another example, same story. It wouldn't be, hey, there are no hotels in town, we want a hotel. It would be more like, okay, someone who's done a number of hotels and understands that industry they've gone through a market analysis, they've determined that a hotel with 70 rooms is correct, and this is what the key rate ought to be, and this is site selection, and they're looking for money to build that now. These are examples to explain that we're looking for things to be, certainly more buttoned up. That being said, we like to get involved before the concrete is dry, because we probably do want to try to make things better if we can.
That's great. I think what I was hoping to highlight there is that the communities are intermediaries. They're kind of in the middle, and there's a business on one side, hopefully, that they know about or might hear about, and then there's the investor on the other. And they have a really challenging position here if they want to sell their community or their region versus another part of Maine or the country. And so while we're having a focus on an investor here, there's a whole other component that's important relative to the prospectus that are produced. Andy, you had a question.
So let me just build upon your platform, Charlie.
Can you hear?
Yeah, it's a little faint, but I can hear you, Sandy. Yeah.
So Andy Hamilton, Jonathan, thank you for your time. And I think Charlie's given us a good lens here. Let's assume that a mill community has got a former mill site, it's a brownfield site. Let's assume, as is true of most every one of these communities, whether it be Madison, or Millinocket, East Millinocket, Lincoln, Old Town, they may have either underdeployed assets that used to produce paper or pulp product that would go into the paper making or tissue making operation. But let's assume now that that's an underdeployed asset. It's probably sitting idle. On top of having the real estate, because I agree with Charlie's frame, this is rarely an investor in the opportunity zone context. It's rarely an investor to real estate conversation. It's more an investor to business that's going to deploy the real estate. Let's assume that these mill sites tend to sit on a fairly rich infrastructure cross-section. You may have natural gas, you may have a good transportation network, could have rail into your site. So decent infrastructure. But what you may not have, particularly in some of these rural areas, is investors that are looking for the straight high rate business return. And so you have to have a social impact component. Whether it's Robert or Colin, both of them said, talk to Jonathan about the social impact perspective. So using that framework, a series of connections that are based upon the historic assets of the mill site, business comes in, and a lot of these developers that are looking at these sites tend to have a conscience about what they want to leverage for social impact. But now we want to hear the investor perspective. What's important to you on the social impact side?
Yeah, for us, first and foremost, it's job creation, and not just creating any jobs, but quality jobs, living wage jobs. You know, we look at wage rates, want to make sure that someone can support a family on the types of jobs that we're creating, and furthermore, you know, the goal isn't to hire someone from a $15 an hour job and bring them over across the street to another $15 an hour job. You know, we do want to see improvements over time, and there are a number of ways to try to push things in the right direction. And worker training is certainly a big one. We do a fair amount of CEO training as well, giving the kind of the executive MBA toolkit to entrepreneurs who, you know, they've been hardworking and scrappy enough to start a company, and they've probably gotten their business to you know, substantial size, but at a certain point, the fact that maybe they didn't get the chance to take Accounting 101 or Finance 101 back in school, that's going to limit their ability to grow their company to the next level. And frankly, I mean, aside from even growth, the other issue there is the risks. So we want these companies to be around for the long term, and if you know, if they missed Accounting 101, the odds of them having a pretty significant speed bump somewhere in the next 10 years is probably going to be higher. So we look at all of these different social determinants. You know, for something like broadband fiber, obviously that creates, you know, a number of jobs while you're deploying the fiber, but that's a construction project and then it's done. In those situations, we're looking at how many quality jobs were created amongst companies using that fiber over time. What is the long-term impact to the community? We do a fair amount in clean energy as well. So, I mean, those ones are pretty straightforward to measure in terms of carbon footprint or megawatt hours and things like that. But those are kind of some of the key determinants. And I think one thing you'll see is that a number of our transactions wind up being clusters. You know, we're buying a couple of companies right now where these are operating businesses, they're manufacturing businesses, but because of their location and because of the gentrification that's happened in those locations over the past 10 years, factory workers can't afford to live there anymore. There's not enough available affordable housing supply for people with those types of income levels. So in both of those situations, it's number one, buy the company, number two, own the factory that the company is going to operate in. Number three, add solar when possible. We like to power our own manufacturing facilities. And number four, bring in affordable housing so that the employees can have a place to live. Doesn't need to be walk to work, but we certainly like walk to work when it's available. If it's not, at least having reasonable proximity. And you know, all of these things working together as a cluster, they tend to build a lot of economies and scale. So, you know, you automatically have people who are going to be living in the affordable housing, so you're not as worried about occupancy rates and things like that. Because you have a factory, you know, you have a commercial take-or-pay off-taker for the electricity that you generate. So we do tend to think of these things as kind of clusters of 2, 3, maybe 4 different businesses that are working together. You know, I think in a lot of our foundation partnerships, there are really specific KPIs that a foundation will ask for. We won a competitive RFP process with Kresge Foundation and Rockefeller Foundation for an anchor principal protection guarantee commitment. And, you know, they basically wrote what they wanted to measure over time, and we agreed to adhere to those measurements. So, you know, a foundation or a government agency might have different measures that they care about, and we will agree to, you know, a reporting framework and transparency measures to make sure that they can track whatever levels of progress they want to see.
Jonathan, thank you. I think one thing to really note there is that you talked about measures of impact, and Colin and our earlier panelists talked about the fact that the law was passed without some of what are being called guardrails around impact, and clearly they've built that into their system. Just as another note, some of you know me, I'm an alumni of the University of Maine. I came to school here to go to school for forestry. I did take Accounting 101, but I said, I'm never going to do this. And now I'm running a tax credit program in a business, and so I had to read some of that. So I think Accounting 101 now or later. Peggy, did you have a question? This is Peggy Daigle, who is a former town manager of several rural communities in Maine and also a member of the selectmen right now. Thank
you, Charlie. My question is, a lot of us have business plans. We also have environmental studies and information related to what has to happen on the site. We also have some regional economic development, which is community development strategies. What do we bring down to the meeting that we're going to have with investors that will be helpful to them to see where we're at? I don't want to bring a whole pile of information.
I think the question, and I didn't hear every word, but the question was, what kind of information do we bring into investors? Was that the gist of it?
Yes, in terms of what a community can offer, what they actually, tools they may have. Or
yeah, gotcha. I mean, I'll try to answer that with examples. You know, and I was just talking about this last week. It would be really interesting if a community economic development professional came and said, hey, our town is looking to, you know, add 40 workforce housing units over the next 2 years. And, you know, the county is willing to make this subsidy available, or this land is available, which, you know, is owned by the housing authority, and they're going to roll it into the deal. Or, you know, we want to do some sort of mixed-use office retail housing project, and, you know, we have essentially staple financing, or we have a certain amount of new market tax credit financing available for that. If you have a couple of the pieces of the capital stack together, that makes it easier for someone sitting in my seat to kind of conceptualize how we might be able to be helpful here. And by the way, that's not to suggest that we need you know, a 7-layer solution for every deal that we do. But if there are additional economic development incentives that are available, it's nice to see that if someone has done some of that groundwork initially, it's nice to see how that might be able to come together.
Can you, I'd like to push it a little bit more towards maybe a direct rural discussion, since we're actually in a county right now that's defined as metro under the new markets tax credit, but Millinocket is 90 miles away from the municipality of Bangor that drives that definition, so it's a long ways off. Two questions there. First is if you could just give us a sense of your overall return goal for the fund as a whole, so that folks know that while you're an impact investor, there's still that element that you have to have, and the opportunity zones require that for the investors at some point. And then secondly, you mentioned explaining by example. Do you have examples of tools that do work best in rural communities to try and get you to that return goal for XYZ type of business?
Okay, so you know, right now, as I think you know, we're looking at doing rural broadband infrastructure for Millinocket and East Millinocket. So this is an opportunity that our team is, hoping to get to the finish line on before the end of this calendar year. If we do it, our proposed transaction will include severely distressed new market tax credits that we currently have. So Arctaris has a partnership with LISC, Local Initiative Services Corp, and with it we have these new market tax credits which could be used in $2 million block size projects. Katahdin would be a great use case for that if we can get through the underwriting and everything else like that. That would be a perfect use case for those new markets tax credits. So that would be an example for rural. Another project that we've looked at recently was in the industrial freezer space, and this one was kind of high level. We're still interested in it, but we just never really got the data that we were looking for. But evidently Maine has a shortage of industrial freezer space. This is something that would be used by multiple food producers in the state, and we would look to create an industrial freezer, basically depot, where trucks could come in, store stuff, trucks could come in, pick them up, and it would basically be, it would have a lot of turnover of the food stock coming in and coming out. The social impact narrative there is that currently producers in Maine are sending their frozen foodstuffs either to Canada or Massachusetts, and the state is losing revenue for that. And, not to mention doing much longer, truckloads to get the food out of state. For us, we would put that up as a qualified opportunity zone business. We would have signed contracts with food producers saying, if you build it, we'll use it. And we would very likely have some sort of exit plan where at the end of 10 years, one of the food producers would just want to buy it from us. So those types of things are, good projects, and we can be very helpful in terms of finding a path that works for the local companies and for ourselves, and pulling together different anchor tenants to that type of project.
Thank you. We're here with the Forest Opportunity Roadmap, so we tend to think in terms of wood fiber biomass. But if you also think about where these communities are located and what happens in Aroostook County in terms of food production, you may have just identified an opportunity here because someone talked about freezer space and then didn't give you enough data to move forward. So there may be something along I-95 that would make sense, given all the production, agricultural production in the northern part of the state. So that's something that a conversation like this could actually service.
Well, I'd be, that was a deal which conceptually I really liked, even though, we never really got past first base in the process. I think that makes a lot of sense. And it's also uniquely suited for opportunity zone capital. The business assets offer additional tax depreciation benefits, which, unlike an office building or multi-family residential, that would have an additional tax benefit for the investors. And then, if we thought about wood and biofuels and things like that, we've certainly looked at quite a few different projects. From cogeneration to storage to MDF, CLT, activated carbon. Some of these projects are still in consideration. I'd say given that we generally invest in manufacturing companies, we're looking for people who've done it before and done it for many years. And a lot of the companies that we've seen in that space were either run by people from nothing to do with Maine, and they were coming in and trying to do something revolutionary without a lot of experience working with forestry industry or setting up distribution channels or things like that. And it felt way too much like one of those things that looks good on paper but doesn't come through in reality. Or these were things that required extremely high levels of initial capital investment in order to get to the first dollar of revenue several years out. So, you know, we really like the idea of investing in these types of projects because we recognize how important they are to the supply chain and distribution chain of forestry products in Maine. I'd say we're still hungry to find the right projects there.
I appreciate your comments, just having been working around these communities for probably 30 years of my career. The reality that you're just defining as an investor about the importance of some level of track record of the management team or the industry. Many people in this room have had people knocking on the door at these mill sites with brilliant ideas that sound great on paper, but haven't been able to advance them because of the lack of some of those things that you just mentioned. I'm sure there's people in this room that have multiple examples of that, have been bluntly burned by that. So your discussion around how you look at things pragmatically, I think is really important. That's the reality. I want to make sure we have about 5 minutes left. I want to make sure that we've addressed any questions that this group might have as you think about how you prepare for December, or just you've got Jonathan here, who, as I mentioned earlier, is a very busy person. Here as an omnipotent face on the screen, but also very, very available, very candid. Any other questions from the audience? Jonathan, are you going to join in December, or is that part of your agenda? Do you know?
The December 4th event, I'm hoping to be able to make that one, and I don't know for sure if I'm going to be able to do that one yet. So unfortunately for my family anyway, my travel schedule these days is really bad. But I'm supposed to be out of town that day, but I may be able to pull that back. And also, the info address that I gave, I think, is a great thing to share with you know, companies that might want to talk to us. Also, just for this, the group in this meeting, you know, economic development professionals and whatnot, please feel free to email me directly. I just, you know, I probably don't want 250 companies coming in inbound and whatnot, but if anyone in this group wants to email me, it's the same thing. It's just Jonathan@arctaris.com, JONATHAN @arctaris.com. But you know, if you wanted to send things out to companies, probably better to use the info one.
Well, I also think people would probably agree that family comes first, and that's your decision. But you have a raised hand over here.
Yeah.
Thanks, Charlie. That's actually a great segue into my question. Hi, Jonathan. My name is Lucy Van Hug. My question for you is, how did you pick Maine? And we were having a conversation about how to distinguish opportunities within our communities, but we're competing against 8,700 opportunity zones across the country. And so since you've looked at this and have designated money towards Maine, aside from, you know, personal family connections or heartstrings to the region, what are some other things that might set Maine apart?
Well, I see a tremendous amount of business opportunity in Maine. I think, fortunately or unfortunately, Maine has really lagged in economic recovery relative to other parts of the country. That's not Maine's fault. I don't think it's actually anyone's fault, but what we've seen since the Great Recession was really the elimination of a lot of community-based banks. Historically, it was banks that took deposits in rural areas that had an obligation to put that capital back to work in rural areas. Now, with all of the smaller banks getting gobbled up, and with you know, Maine lacking a major headquarters bank, you've unfortunately got, you know, a recipe for exacerbating some of the situations that have occurred there. So, and that's true of about half of America. It's not just Maine, but I mean, we're seeing the exact same thing in West Virginia and Idaho, and lots of other. Kentucky is going through this at the same time. The lack of headquarters bank thing is really not helpful. You know, we really like working with Finance Authority of Maine and CEI. I think I met Carlos at a conference 7 or 8 years ago, and you know, we've been good friends ever since. So I mean, I think you know, it's a combination of things, and Arctaris is doing this in quite a few other states too. You know, we've made similar commitments in Baltimore and Southeast DC and Michigan, and we just did Cleveland, and I think state of Ohio is next, and some areas in the Pacific Northwest, Oregon, Washington. So we're doing this in Maine and other places as well, but Maine just really fits our strategy, and I like to be there.
We should be grateful for that. I
don't know if you ever saw in back when Amazon was doing the HQ2 bake-off, New Hampshire's bid was just, hey, we're not going to offer you any incentives. You should come to New Hampshire because it's a great place to be. I thought that was kind of clever. They of course didn't get too far in the process, but you know, I mean, I like working in Maine.
That's great. Are there any other last questions for Jonathan? I want to express our thanks. Hopefully you can make it in December, but you have priorities. And now this group has had an opportunity to really kind of have a direct conversation with an investor, which is unique. So thank you very much, Jonathan. We appreciate it.
Thank you. And if my December 4th trip gets canceled, which is 50-50 at this point, I will be there, and I would love to visit with you in person. But either way, you know, would love to hear from anyone in the room after this event if there are things that we might be able to help you with.
That's great.
Thank you. Thank you again.
Thank you very much.
Take care.
Thank you, Charlie. Thanks again, Jonathan.
Thank you.
Now we're going to give your brains a break, and please, lunch is served. We'll take 15 minutes to give you a head start to eat, and then we'll invite James McCray up to talk a little bit about the statewide industrial inventory database.